Remember that feeling when you're at a restaurant and the menu is so overwhelming that you just panic order the first thing you see? That's exactly how many of us feel when choosing between ETFs and stocks. But here's the thing. While you are stuck in the decision paralysis, your money is sitting in a savings account, losing value to inflation every single day. I know because I was there too, endlessly researching, comparing, and honestly getting nowhere. Therefore, today I'm going to show you exactly why ETFs are probably the smartest way to start your investing journey, especially here in Europe. No complex jargon, just practical steps that actually work for us Europeans. Before we dive in, let me clear something up. An ETF is simply a basket of stocks packaged together. Think of it like a playlist of your favorite songs. Just like you don't need to buy individual songs anymore, you can get the whole playlist in one go. That's what an ETF does with stocks. Let me share something that shocked me while I first learned it. Over 90% of professional stock pickers fail to beat the market over a 15-year period. Here's how their underperformance looks over the years. So yes, you heard that right. Even the pros, with all their fancy degrees and expensive tools, usually cannot beat simple market index ETF. So sometimes I think, should you even bother? Well, from my own opinion, if you are interested in investing and like to follow the news and have higher risk tolerance, why not? I will share the video so that you also have some choices, but for today, let's cover the simplicity and effectiveness of a broad market index and the ETFs that replicate it. I know what you're thinking, but Justina, what about all those people showing their amazing stock picks on social media? Here's the truth. They're only showing you their wins. It's like someone posting their best selfies and pretending they wake up looking like that. I also have some positions in my portfolio that are up more than 40%, but as well some choices followed by 76% drawdowns and actual losses. Whoops! Having the core portfolio on broad market makes a lot of sense. Let me show you exactly how this works with real example. My own portfolio that I'm sharing with everyone who is interested. If you want to see the portfolio and my steps that I make, you can register to a platform that I use with the link below and will see it on your screen. I invest in Vanguard S&P 500 UCITS ETF or ticker VUAA. This is one of my choices with which I want to show you how the disciplined periodic investing with small amounts works. I started almost 12 months ago and here are the results. Let's talk more about the ETF. When you buy this one, you're instantly investing in 500 of America's largest companies. And just think about that for a second. With just one purchase, you own a piece of companies like Apple, Microsoft, Google, and hundreds more. Let me break down why VUAA is such a powerful example of what we are talking about. First, it's UCITS compliant, meaning it meets all European regulations. You can find us by looking for UCITS in the ETF name or description on Freedom24 or any platform that you use. Second, it's an accumulating ETF. See that ACC? That means any dividends these 500 companies pay get automatically reinvested for you. So no need to manually reinvest, no extra tax headaches. Your money keeps working for you. And third, look at the cost. But UAA has a total expense ratio of just 0.07%. That means for every 1,000 euros that you invest, you're only paying 70 cents per year in fees. Compare that to actively managed funds charging from 1 to 2% or the transaction costs of buying 500 individual stocks. Let me show you exactly how to buy it. On Freedom24, just type VUAA in the search bar. You'll see it listed as Vanguard S&P 500 UCITS ETF, USD accumulating. The fact that it's accumulating is perfect for most European investors because it's typically more tax efficient. Now, here's something fascinating. If you had invested 10,000 euros in S&P 500 index 20 years ago, it would have grown to more than 60,000 euros today. And that's including major crashes like 2008 and 2020. This is why Warren Buffett, arguably the world's greatest stock picker, has repeatedly said that for most people, consistently investing in a low-cost index fund is the best strategy. But what about those YouTube videos showing how someone made 1000% returns on individual stocks? Here's the reality check. For every winner they show you, there are countless losses that they don't mention. It's like social media. People only post their highlights, not their everyday reality. Therefore, here's what I want you to do. Start with ETFs like VUAA. Master the basics, understand how markets work, build your core portfolio with broad market ETFs, and then if you still want to explore and you have time for that, go into individual stocks a little bit later. You can do it from a position of knowledge, not FOMO. I guess I need to do a video about that too. And hey, I'm not just telling you what to do, I'm showing you my actual journey. Do not take any opinion as a financial advice because I'm not your advisor. My goal is to show you my journey's results, which might just encourage you to start yours. A reminder, when you register on Freedom24, you can follow my portfolio completely free and just might take it as a simulation with somebody else's real money for your own education. You'll see every investment I make, including my monthly 100 euros placed into VUAA purchases. No hiding, no trust me bro moments, just real investments, real results, and complete transparency. You'll see exactly how these regular 100 plus euro investments grow over time. And this isn't about following my trades, it's about seeing how consistent, regular investments can grow into something meaningful. You'll see the ups and you'll see the downs, the regular monthly investments, and most importantly, you'll see that you don't need huge amounts of money to start building wealth. And for the next time, here's your 2-week action plan. First, open your Freedom24 app and search for VUAA or other similar broad market ETFs. That might be SPYL, or if you prefer the whole world, VWCE and similar. Set up a monthly investment plan for yourself. How much can you invest? Even if it's just 100 euros plus, like me, you will see the results over time. Follow my portfolio to see how I implement this strategy in real life. Start learning about market cycles and behavior instead of getting lost in individual stock analysis. And next video, we are diving into how to actually build your first ETF portfolio, including exactly which ETFs I recommend looking at, how to choose them, and what to note. You don't want to miss that. And remember, Warren Buffett himself has said that for most investors, a low-cost index fund is the best choice. If the world's most famous stock picker is recommending index ETFs, maybe we should just listen. Drop a comment with which ETF you are considering and why. Share your thoughts, your fears, your questions. We are building this financial journey together. And if you are following my portfolio, let me know what you think about this transparent approach to learning. Now you can smash that like button. You've earned it. But most importantly, take action, because in 2 weeks, I want to hear about your first ETF choice in the comments. And remember, starting is better than being perfect. You are not doing this alone. We are in this together. So see you in 2 weeks.